Good morning, boys. Um, I do missed a video last week. I wanted to share how I passed the Top Step account the first days of January. It's gonna be a very quick video. I'm gonna share it probably on Tuesday and Wednesday. Whenever I had time to go through that, I'm just gonna, talk about what I think about prop firms and how to build their system. It's gonna be really short video. I hope everyone likes it. And yeah, for this week, I just want to go through the market as is the main week of January, so we can start trading this week. Although I don't really suggest that because we do have a bunch of things happening in the world. Venezuela being, attacked by America, and oil being a very interesting market right now. So let me go through that first. So as we can see, with everything is happening right now, I would really like to see some push on this oil market. So as we can see, this is pretty much stuck in a range, but has been creating high resistance liquidity all over the place. As you can see, this is a very nice pool of liquidity, as every high is still intact here. This is the only one who took the previous high, and then all the weeks were pretty much bearish. Right now we can see how we just ended up sweeping this one, and we do have momentum, and this is coming with the news. I guess on Friday that happened. So this is very interesting markets to be, it's checking out. Definitely it's going to be very volatile, so you want to have that on your chart. And yeah, as we can see, what's happening here, we do have a fair value gap. We do have this equal highs coupled with this low resistance, high resistance liquidity, and we went through this order block, taking all these equal lows liquidity. So if anything, I would like to see price start moving bullish from this area. That would be such an ideal scenario. So I'm kind of waiting for that to happen. As you can see, we are respecting this level. We can put, of course, the anatomy of it, just to see if we can get some sensibility around these levels. As right now, I don't want to see price going through the 50%. I would just like to see some low resistance liquidity through these areas, as we do have a gap there and we have equal highs. That would be very good. On the 4-hour, I don't know why this keeps taking me everything off here, but as you can see on the 4-hour, again, pretty much the same scenario. We did have some very shorter flow, but after this accumulation, we start pumping. Little pullback here. We swept these lows, making kind of like a market make it buy model. And I would like to see if we can get up here. So I'm not interested on engaging now, mostly because it's the first week of January. I just want to see price starting a very bullish order flow, and that will take us into these highs and this one here. So we do have long-term targets. This could probably happen just 1 or 2 weeks, so it's not even that long-term. But when price starts aligning and going toward the bias, and we do have a trend because of the news that are happening around us, then that could be a very gold machine. Like it could really become a ATM where we can get easy low resistant buys all the way up there. So we don't need much, we just need alignment. And right now we kind of have that. If you move from midnight open, we had that order block that created the bullish candle. So I'm kind of expecting today this asset to expand. So as you can see, we did have some order flow over here, changing state of delivery. FVG doesn't even get tapped around the 50%, goes away, comes back, fair value gap, order block, perfect. So right now I just want to see price leaving this gap and not really coming back and maybe rejecting. That would be such amazing. Or maybe from here, not even touching it. That would be cool. So that's it for our friend oil. Now let's talk about Nasdaq quickly. Okay, so Nasdaq, pretty much this is the monthly candle. This is December, so we do have all-time highs right above us. We kind of made an inside bar, so this could be very slow and choppy price action for the next month. January usually is not that good of a month. Usually is bearish if we check the seasonal tendencies. Let me share the seasonal tendencies real quick, so we can all get that, because maybe you are not used to that. So I'm gonna show you really quickly, briefly introduction to it. There we go. Maybe I'm gonna cut the video here. So here we go. This is seasonal tendencies, and you can see January tends to be a bearish month, February bullish, March consolidation with the other bullish month. But you know, just think about the power of three, right? So if we open the year here, usually we do see some bearishness the first month, some accumulation, and then the distribution phase. That would be such an ideal place to start, you know, maybe moving towards the all-time high. We still don't know, so we just know that the bearish pool is here. This is a swing low, so it's also coming with liquidity. And about below us, we do see this BC. In here, I wouldn't call anything. I don't see any sort of gap. There is another concept by ICT that would be measuring this candle 50% and this candle 50%, and getting the half of it like a fair value gap. So that would be around here and here. As you can see, we did have the reaction head, but right now I'm not really taking a look at that. So mostly I like the bigger idea. So I like the fact that we have sell side here, a fair value gap underneath us, order block. We do have another fair value gap underneath the first one, but you know, first we need to reach that. And of course, remaining bias, sorry, not bias, remaining sell buy side, that is all-time high. So this is pretty much the range we are trading around. So we can get this one as short-term buy side and sell side. I'm gonna make it a little bit lighter, and yeah, that's it for the monthly chart. So if we go over the weekly, again, you can see how price is consolidating around the monthly time frame. There is nothing to do in these cases. Why? Because what's the bias right now? You don't know. The only thing we like is seeing the weekly opening up here without any wick. So that must be opportunity to form the wick in this week. It could happen maybe next few days. Maybe it's not even gonna happen, but technically I would like to see price going lower. We had a bearish close, we left equal highs above us, we have an order block, but overall we are ranging. So it's really hard to come up with a bias in these situations. You say this is our range, we're trending, we're moving around the 50%. So again, complicated week, you can skip it, no problem. You can start the next week, you can start on maybe February. It's not a big deal. If you don't want to trade consolidations, just skip it. And it's gonna be beneficial for your result, because this is hard. It's not simple to trade accumulation. When you don't have a clear trend, like we used to have here, it's gonna be very difficult. So up to you. My suggestion would be, if you're new, don't touch it. If you are advanced, then you probably are not even watching this video. So, you know, wait for conditions to get better, and then we can move. Okay, so if we check the daily, just to give a briefly outlook, you can see that we are making an inside bar. Why? Because Friday was a big ass range. In fact, we are ranging around that day. So I don't know if we're gonna form a swing low or a swing high. I still don't know. The only thing I see is this being a new week opening up. Here we go. So this is our new week opening up from the closure to the open of this candle. We had a bunch of news this week with oil again, and we're pretty much still respecting this week over here. As you can see, this level is respected. You can use this fair value gap if you want. Is a suspension or suspension fair value gap. You can see it doesn't really change anything, but we have the 50% open of this suspension block aligning with the daily open. So if we are bullish, I don't really want to see price going through the 50%. So if we can keep the bullishness on this day, that will be such a perfect scenario. Here we have resting equal highs. This is the monthly high, so we know that's a very good pool of liquidity. And here we don't have equal lows, but it's still resting sell side. So those are reference points that you want to have on your chart, because we can get reactions. Okay, so again, new week opening up is here. You can see we had a sweep of liquidity and a big dump, right? Let's check quickly ES. This thing didn't really happen on ES, right? So we had a smart money divergence over there, right? ES right now is a little bit stronger than NASDAQ. It was weaker when NASDAQ did take this high, but now it's becoming a little bit stronger because of this fair value gap being left open on NQ, but being still being closed on ES, right? You can see that? Yes. Fine. That's a very good signature. Also, we do have a new week opening up a little bit higher on ES. That's another good sign. Why? Because maybe we don't even need to go all the way down on NASDAQ to mitigate that. We can just do it on ES, and that will be it. As you can see, now I'm gonna pull up the 50% of it, and we can see price can't even touch it and goes all the way above. So what I'm looking right now, I'm looking for price to kind of sweep these highs. That would be such a good thing, because when price does these breaks, usually people gets involved on the wrong side, expecting price to continue, but they ended up failing, and they ended up taking the buy side. That is current previous day high. So if you want to have these two levels on your chart, you're gonna write down previous day high, PDH, and PDL for previous day low. So once you have this, you got the pulse of liquidity on your chart, you got your new week opening up that can be used as a support resistance level. We don't really want to see price to go through it, and we don't want to see price we actually want to see price respecting it. So that's pretty much it. Okay, let me check the daily real quick, so we can pull up maybe some new levels that are hidden from us. Right now this is a volume imbalance. We didn't really reach it yet. We can measure this week, see that price is around the 75%. We might reach the 50%. So now if we go on the 4 hour, on the hourly, yeah, you get a more advanced levels that we can reach, and casually, randomly, the hourly presence of CB, and that CB is on the 50% of the daily wick. So that's another random area. So I'm gonna have that on my chart. Now I'm gonna pull up the I'm gonna pull up the daily open and the midnight open. Those are very relevant levels for me. And then I'm gonna map out the daily close and the next 2 days close. Okay, so we do have a briefly introduction to what's going to happen on the next days. We can take the current highs and lows here. I'm not going to map out the other days because we are in such a big range, so I don't really need to. If you want to, you can just go and do it manually for yourself. This is the Friday range. And yeah, that's pretty much it. If you're looking for price to adjust to the 50%, well, that already happened. But as I mentioned, if we measure the week, and again, the weeks are just like fair value gaps, we can find out that we actually have not reached the 50% yet, and this level is coupled with hourly fair value gap. So that's pretty good. Keeping the eye on the higher time frames, we can check ES. We can see we had a 22, so a 10 p.m. sweep on the 2 a.m. open. Same thing happened here. Both took the 4-hour high, so good. On the hourly, what do we have here? A fair value gap. Amazing opportunity here. Why? Because we know that if price wants to keep this bullishness and we have a target that is not only this one but is also previously high, we can keep our bullishness, right? So that's very good. Wait, something's off here. Oh, I was on the 30 minutes. Oh, my bad. Well, doesn't matter really. Probably I'm gonna use this gap though. Just feels right. So if I go on the hourly, we do have a busy, we do have a order block and a couple order blocks coming over there. So if I go on the 30-minute, you can see this gap here, right? So we can use that one. It doesn't really matter. The thing that matters is that there is a gap there, and we can see that on the hourly, on the 4-hour, and the 50-minute. Okay, so we are just refining it. I'm gonna write down that this is a 30-minute, so everyone knows, and this is hourly. Okay, again, we are currently sitting above the midnight open. That's a thing to consider. And then we are sitting above the New York open. So this is our classic rule of thumb. I don't like to buy anything above the New York and the midnight open, because it kind of feels like chasing, and I don't want to chase my trades. I want to wait for them to set up on the better conditions. What do you see in this chart right now? Take a couple of seconds to spot it, and then we can talk about it. You never pause the video, I know. That's a trick from ICT. Anyways, here we go. We have a couple of lows coming in here, and that's also Asia low. So we do see equal lows resting underneath us, underneath midnight, underneath New York, and really close to the new week opening gap. So first week of January on Monday, usually Asia is a cool factor. If we check the signatures of all the flow, we are kind of respecting the bullishness in a cool way. Why I'm saying that? Well, because this gap wasn't even closed, so price was really in a rush to get somewhere. But here we don't have nothing, so the gap comes here. So I still think price wants to go up. Matter of fact, here we got an opportunity again, and then price came back and did what? Big dump, and the candles did what? Well, the wick rejected, but the body stayed inside. So what we like to see in these instances, well, we like to see price continuing moving forward, and then that will be our next target coupled with the 30-minute high. So now we can start dropping on lower time frames. We can see already a market maker buy model setting up. Probably on the 1 minute, this looks very cool, but you can see already the 5 minute getting that amazing low risk buy here, and yeah, this doesn't really allow me to get in because we are still above the midnight in the New York Open, but you know, it's a good opportunity. We can see yes being weaker, as I mentioned before, like not weaker, but like stronger in the bearish side. So it can't even go below this low. Nasdaq is not doing that, so it's very strong. It wants to go up. You can see the SMT there. Pretty much they have the same target. And again, if we check Asia lows on ES, we do have equal lows. And guess what? Look, the 50% of the new week opening up is coupled with these equal lows. See how price touch it and goes away. Touch it, goes away. Touch it, goes away. It's a very strong sensitive level, so this is gonna be a very relevant area, and we already know, so it's pretty much the 50%. So that's cool. So this is how you find a draw, okay? So we have condition 1, we want price to go to the 30-minute high, 30-minute balance. We want to see how price reacts in it. So if we get price to get through it, then we keep being bullish. If price doesn't go through it, then probably it's getting sensitive around, I don't know, the 50%, maybe the lower quadrants around maybe 75, 25 or 50, then that's a good signature for us to maybe expect price to go around New York midnight and maybe attack the Asia low and probably getting nasty here. Okay, so we have framed two scenarios where one is price going here and maybe getting weak here and then rejecting, coming back all the way down. The other scenario will be price dropping here, maybe taking the buy side and continuing to the upside. So, you know, this is how you frame a bias and how you spot these levels. I don't think I did anything really complicated. This is just how you frame everything. This is how I do it. I'm probably gonna start sharing these videos more often. This is quite long. It's 22 minutes. I know. Probably, well, this is gonna be a raw video, so I'm gonna publish anyway, but next time I'll try to make it shorter, maybe quicker, and you know, maybe a 5-minute, max 10-minute outlook, and then we can go over the trades I took at the evening or later in the day. So, you know, we're gonna find out that with time. Right now, yeah, I'm not gonna talk about the trade I took to pass the last challenge I did. I took like 3 trades they were very high probability trades, and yeah, so I'm gonna make a own video for that, probably coming in these days. So yeah, subscribe, leave a like if you're interested on the next videos, and leave me a comment if you want more. And yeah, thank you for watching. Talk to you later.